Recently, Bangladesh's financial market has been under visible stress. Liquidity mismatches, pressure on reserves, rising funding costs, and inflationary concerns have collectively signaled an urgent need for disciplined liquidity management. Several institutions are facing tightening conditions, and the risk of default has heightened systemic vulnerability. In response, Bangladesh Bank has introduced updated and consolidated guidelines for open market operations, designed to stabilize liquidity, strengthen monetary transmission, and support inflation control, effective from May 3, 2026. This is Tahmina Jahan, an analyst at Lion City Advisory, and in today's video, I will be presenting a comprehensive overview of these guidelines and explain what they entail for banks and financial institutions. The primary objective of these guidelines is to regulate short-term liquidity conditions in the banking system. Through open market operations, Bangladesh Bank injects liquidity when the system faces shortages and absorbs excess liquidity when inflationary risks increase. This dual function ensures smoother money market operations, greater interest rate stability, and improved implementation of monetary policy decisions. For conventional banks, liquidity injection is primarily conducted through repurchase agreements, commonly known as Repo. These are available in overnight and 7-day tenors, with the 7-day repo conducted regularly. The rate applied is aligned with the policy rate determined by the Monetary Policy Committee. Repo operations are particularly important during reserve maintenance periods, allowing banks to meet cash reserve requirement obligations without triggering funding instability. Additionally, the standing lending facility provides overnight collateralized liquidity on demand, offering immediate support to institutions facing unexpected shortages. On the liquidity absorption side, the standing deposit facility allows banks to place excess funds overnight with Bangladesh Bank without requiring collateral. This mechanism helps create a floor for short-term interest rates. Furthermore, Bangladesh Bank bills are issued through auction to absorb surplus liquidity. These instruments are available in short-term and longer structural tenors, and importantly, they remain eligible as collateral in repo and standing lending operations, thereby maintaining flexibility in liquidity management. All collateralized transactions follow a structured settlement process. In the first leg, funds are transferred against eligible government securities after applying a 5% haircut to manage risk exposure. In the second leg, the borrowing institution repays the principal along with interest calculated on actual on 365-day count basis. If a participant defaults, Bangladesh Bank has the authority to liquidate the collateral and recover dues. Penalty provisions apply at the agreed facility rate, and these rights remain enforceable even in cases of insolvency or restructuring. Although securities remain on the institution's balance sheet, they are marked as encumbered and cannot be used for statutory liquidity ratio compliance during the transaction period. For Islamic banks, liquidity support is provided under the Islamic Bank's Liquidity Facility, structured on a Mudaraba basis. This facility operates with a 7-day tenor and follows a profit-sharing mechanism instead of interest. The provisional profit rate is linked to the institution's 1-month deposit profit rate, with final adjustments based on realized earnings at year-end. In cases of willful default, Sharia-compliant penalties are imposed and transferred to Bangladesh Bank's Disaster Management and Social Responsibility Fund. Beyond temporary operations, Bangladesh Bank also retains the authority to conduct outright purchase or sale of government securities to permanently inject or absorb liquidity. These transactions are conducted through auction mechanisms with same-day settlement, allowing rapid structural liquidity adjustments when necessary. Overall, these consolidated open market operations framework establishes a disciplined liquidity corridor system. By combining fixed-rate liquidity facilities, auction-based absorption tools, Sharia-compliant alternatives, and strict risk controls, Bangladesh Bank aims to prevent systematic liquidity disruptions, strengthen financial stability, and support inflation control. For banks and financial institutions, a thorough understanding of these operational mechanics is now essential for effective treasury management and long-term resilience in a tightening monetary environment. That's about it for today. See you in the next video.